Welcome to the ultimate Forex trading course using my 35 years of trading experience. I've lost money, I've made money, but I've come up with a situation where I can fortunately spend a lot of time with my friends and family thanks to my trading analysis and my trading experience. And I'm going to share that with you today. Hopefully you're going to enjoy the next 15 minutes or so. I'm going to go into quite a bit of detail which you might not understand initially. That's fine. This is the whole point. You might have questions. Come back to me with questions. I'm happy to help. So the subjects we're going to discuss today is reversals, how to identify 97% win rate reversals. I'll show you that one. Believe it or not, continuation patterns and structures. This is really important for onward success, compounding to success. And the gold on steroids software which we have, which is fantastic. And if you have any questions, go to info@thetradingmentors.com or www.thetradingmentors.com, where you can contact me there. So the subjects to discuss, we're going to discuss today, is convergence, really important, and I'll explain what convergence means. Divergence, positive and negative, how you work that one out and what you do with it. Change of character, break of structure. You might have heard these terms before, but we use them slightly differently. Understanding price cycle within a trend is really important, because that gives you the edge over everybody else. You will not be trading like everybody else. We do not trade like the 99% of retail traders. We trade completely differently. So understanding reversals with strong support and resistance is a game changer. So strict rules based upon trading for success, entry points or the trigger. These areas must, I say, discipline and patience is really important. Convergence on the 4-hour, 2-hour. I don't often use the 1 hour to be fair. Divergence must be in place, and I'll show you that. Strong buy signals above 60 or even 65 if you want to be super fussy, all will be explained. Trade must be at least 2 to 1 risk to reward. Often it's 4-5 times risk to reward, sometimes 10 times, but that's rare. Gold on steroids software is something we have, which is fantastic, and I'll show you how this works now, and then we'll go into it later on a little bit. So this is a system where you can bank 30 pips on a regular basis. So we're just waiting for the change of character below the 50 moving average, and then you bank 30 pips. Thank you very much. On the next position, we had a buy signal live above the 50 moving average, another 30 pips, and a sell signal here below the 50, 30 pips. That's how it works. In terms of more detail, this is an oscillator we use with it. And we can see that we need to see that the price, if you're selling it, the oscillator must be pointing down on a 15-minute time frame, and pointing up, of course, if you're buying, so that you can get into that position and go with the trend. As we know, the trend is your friend. Now, in terms of lot sizes, if you are trading gold, now just a warning here that if you're trading gold for the first time, just be aware that it is very volatile, can be very volatile, and I would not recommend trading gold if you're just starting out on your trading journey. Forex indices are much more reliable, I guess, much slower, but will give you into the market and you'll make plenty of money anyway. But if you are trading gold, these are the lot sizes recommended. Trade at your own risk. So $1,000, 0.5, 2,000, 1 lot, 4,000, 2 lot, and so on, and use the compounding formula. So a very warm welcome to the initial tutorial based upon very high risk to reward with very high win rate of 97%, and I'll show you how that works and why it works and how you can use it immediately. And if you've got the reversal system, then you will understand this completely, hopefully. And this tutorial will help you understand it even better, hopefully. Now, the first thing you can see here, that we do have a demand area, we do have a supply area, several, and you can go down in the markets, you can see them. But which one is more valid? It's right in hindsight to say that this one here was a very good one. How do we know? We just can't tell. And this is where most people, most retail traders are trading blind. What you need to know is how strong this is. And this is one of the tools we use. Special settings, standard settings we don't use. Okay, these have been tested over many years. So use them wisely. The first thing we can see here, and this is not hindsight, this was actually here before the move. This order block was here, and it had a buy power of 80, very, very strong buy power. Above 60, above 65 is very, very strong. 80 is a no-brainer. Sell power 70 is also a no-brainer. First thing we're going to talk about though is convergence within these systems, because if there is a gap between the demand area, the blue zone, and this buy power, this is not ready. This is not convergence. This is convergence at its very best. See how these join together? So this is convergence, the first rule to your success. Make sure you have that in play. Step 2, you must ensure that you have, in this case, positive divergence. Positive divergence is a leading tool. All these are leading tools. These are telling you this price is going up. This is telling you this price is going up. They're leading you into the direction where it's going to go next. Okay, these are not lagging tools like most people use. So once you have convergence and divergence, your software will actually show green for buy, or it will show you red for sell. See this here, convergence into supply, sell power 70 with divergence negative in red, the opposite for a buy. So there's your opportunity. The other thing that we must understand is the price cycle. Where is the price in terms of overbought or oversold? And we can see immediately that at this point here, where is it in terms of the price cycle? This is going down, folks. Where is this in terms of the price cycle? Price is going up, folks. Okay, so understanding that is crucial for your long-term trading success. Now, once you have that information, you are not going to even wait for anything else. Once you have the convergence, you are going to be buying it on that order block. Even I will be buying it, especially if the price is going down and red. I want the price to be pushing down, ideally. I'm not going to wait for it to start going up. I am then going to have my target, which is already set. Target is already set. You can see it where it is. You can see that you've got a 4.64 risk to reward. Massive risk to reward on that position. So don't even hesitate when you see that going on. Just make sure you've got convergence, divergence, and a buy power above 60. So moving on to continuation patterns, so that you can get into a position, and moving on to compounding, to compound your account for a much bigger number. I will show you that now. So the value of understanding the reversal point, how strong it is vital. Understanding where the price cycle is it overbought, is it very overbought, is it very oversold, will give you the power to make better decisions. And then a continuation pattern from there can give you an additional trade if you wanted to. Now you can of course just hold that position from here and then just hold it until it reaches the target. That's it. You can do that. That's not a problem. I would do that. However, there are opportunities within that trend that give you the opportunity to get back into the position if you so wish. Let me show you. The target is the same. It's already set. So let me explain what's happening here. The first thing to say that as the price moves above this 50 moving average, as it's set, special settings, don't forget these are special settings. Do not try and use standard settings here, folks. They just don't work. So once you get the price, this is simply a correction here. This is a correction. Look at the price cycle within that trend, within that change of character back here. Easy to see. Now, what you're not going to do, you're not going to be buying it here. You can do, but it's not a continuation pattern. So what we wait for is for the price to move and settle above this area here, above this 50 moving average, and then the price goes up. Now, one thing that I would suggest if you are adding to a position which is compounding, I would suggest that you, once it gets to this and you're opening a position, please move your stop loss to break even on this initial trade. So you had a trade here, okay, and so therefore you're going to add to a position here, compounding, but you can't have two positions with risk. You can only have one. This is zero risk because you've moved your stop from down here up to here. So this is really vital. So that continuation pattern is what to look out for if you are looking to add to positions. It could be that you've missed that position for some reason. That might be an Asian session or whatever. And so therefore you're looking to add to a position. So when you see a pullback, wait is the key. Wait for that price to break up and then move. And there's a nice 2.96 risk to reward there, 88 pips. It's not small, but the important thing here is the risk to reward is where it comes into its own. And you can repeat this over and over again. Don't forget, if you've got any questions, please let me know. I'm here to help you and support you.